So what? Oh, okay, okay. You said what the core? I don't know what a man that. Want to try? Want to try to chop this bitch up? Something serious too. Nah, everybody think it's the same as his. Is.
I thought it was 7:30, bro.
I did say it was gonna be the same time as yours, but I ended up just picking 7. To
See,
be honest with you.
I started working out at 6:30, just to give myself some grace.
Ain't nothing wrong with that.
I know I'm gonna just finish it when we get off this bitch.
Speech.
What's up, Justin? Chilling, bro. Goddamn. Just started chapter 19.
You say you just started chapter 19 or what? Oh
Shit,
shit.
shit, bro.
You say you just started chapter 19 of the series 65?
Yeah.
What up, Twan?
So,
What up, Steph the Great? And just let me know what time you want to officially start and get the flowing.
You tell me.
Tell me. Niggas is so unserious, dog. Twan, man, you quiet, bro. What's up with you, bro?
Grown man acting like that.
What's up, Twan?
what's up with you?
What's up, Gangy?
Yeah, bro.
You sound like you on the whip.
Opposite, bro.
Okay, okay. But the weather like
Ain't nothing started here.
I
where the
do
weather
all
coming from? Coming from the south or north?
the West.
The
West.
west.
What's up?
What it is.
Oh, that's what. Okay. I zoom in because this look.
All right, Justin, I'm gonna go ahead and jump into it, bro. All right, so before I start, just let everybody know I won't be giving away no like financial advice in terms of like telling people where they money at, when to buy and sell. This is all my personal opinion. Uh, I'll give a bias about the overall long term trade. I mean, not trade, but the overall long term outlook, as in if it's going up or down, and then I'll give like a short term outlook up if it's going up and down. What I'll utilize to do that is the Jeanius indicator, which is on the trade genie. And so if you see me click on this high indicators setting right here, if I click this, you can kind of see everything that I've drawn for myself. Because I add a little extra, like just to know like Fibonacci. But usually when I'm at all time highs, I like to use the Fibonacci and the Fibonacci extension to kind of give me a possible outlook on where the market could go beyond the point that it's at. And so if you see any like red lines or anything like that above price where there's nothing, that's usually because I probably use some form of Fibonacci to dictate my own personal expectation of price points. So we're gonna start with ES, which is the SPY, the S&P 500. If y'all look over to the right, everything I go through because of futures, I like to focus on futures markets, and I do a little FX as well. I don't really trade options anymore, but what I did do is when I put this watch list together, I kind of gave everybody a outlook of the 3 different types or ticks that align with what I'm looking at. So even though I'm only looking at ES, the outlook will align with S&P 500, SES, SPY, or S&P 500 for with NQ, same with the Dow, same with small caps. So looking at the SPY, you can see price switched up right here on this daily. Also, I'm below the daily chart. I'm only going to be looking between the daily and the weekly, and I'll just review like the past movement, which is why you see this faded line going up and down. See the beginning of the past week and kind of what happened at that point. So if y'all look at this, the market ended up pushing late last year up into this I guess range right here. I draw a lot of ranges as well. And what happened once it got to the top of this range is it kind of pushed up pushed back below, and then it kind of pushed up again. What it started to create here was what we call a rising wedge, which was, is you expect it to break. Sometimes it doesn't break to the downside. Sometimes it breaks to the upside. What it did was it got to this 127.5 fib that I drew. I don't know how I got that or how I drew it, but this is the first fib point that it got to. The last two midterm extension fib it would probably get to. But what it did was it got to the top of this wedge and dropped down. It pushed down the wedge. And you would kind of call this like a break and retest where it broke back into the range here. And then now it's retesting this range, creating basically like some dip at the top of this range. So for me, I'm looking at ES as Jeanius drawing this downtrend right here, and is also holding some uptrends. In long term, Jeanius is telling me that the structure is up for the short term and the long term. And obviously we can see that because all of the trend lines are up. But right now we can say that it's back in this range and is also ranging between this selling candle right here. So if you look at the beginning of last week, it sold, it broke this untested low here, which is where you can see these untested lows here as well, and these demand areas, which is also being drawn Jeanius. And it basically bounced from this man here, this one bounced from this man here, and retested hot dot of right here. So I'm expecting it to kind of hold back inside of this range and maybe continue to hold this downtrend here to maybe sweep some more quickly. To be honest with you, that's what I'm looking for. The invalidation of it would be price, I guess, break back above this high of this range right here. So price would have to move back above this range and maybe break some more liquidity up here at the top right here. And if you can see, Jeanius not only tells you where the liquidity is, but it tells you the percentage drop from that liquidity point. And the highest one here is a drawdown of 3.15%. So basically, ES or SP500, once it hit the point here, it fell 3.5%, and it's holding a volume of 1.319 million. So that's just good analytics to look at. But when you're, I guess, looking to trade on the day trading scale, on the short term, you definitely don't want to be married to a side. You just want to have some type of bias and then just wait for that confirmation. So even if I was waiting for a sell to break low here, I would need this short term, this small term trend. If I went to like the smaller time frames, I would need this candle, another candle to be breaking below here and pushing back down into here. So I wouldn't just automatic sell just because I see that there's a third touch point of trend. But then in Q, again, this is a line that I drew to show you the beginning of last week. It's somewhat aligns with the SPY. It's not with SPY. But if you look at the long term, you can see that the long term trend is up, the short term trend up. And also kind of holding a range as well from this low to this high. It's kind of staying within that range. And also get that rising wedge here as well into the other range. And so it's kind of looking like price could be breaking below on the short term, which is between like the 4 hour and the 1 hour. On the short term, price could have broke below structure and came back up to retest this line here. So as long as the price doesn't get above this range, and as long as price doesn't break above this trend line right here, then I would be assuming that price would at least somewhat start pushing down somewhat up in here where this supply area is, in this point right here. So I'm looking for us to put just a little bit more to kind of start rejecting somewhere up in here. Possibly could even squeeze some more liquidity right here at these two untested high points. But again, we're so it's a clear out in the short term. And if you're going to trade long term, again, you want to wait until price gets at buy points on the long term to really get in. Meaning you would want to wait until that's pushed down, not kind of buy up here where it could possibly sell. You never want to buy at the top of a range, and you never want to buy inside of a supply area. That would be crazy. Anybody have questions? Again, I draw a lot of ranges. So if you look at here on the daily,
Yeah,
you give me downturn. What's up? What's up?
I got you. So I those lines. You get a little blue when you have that leave the star.
Yeah.
Yeah. What are those called? Because they showed up on mine too, and I didn't know what kind of information they were giving.
It's just untested lows. But if you think about pivot points, if you think about where you were kind of before you start using it, you were kind of already doing it on assume they realize you were doing it. But basically, we found your pivot points. Like I could go here. Here's a pivot point. So even if I took these off of my chart, I know that I could go back and look at every point the market picked and just draw a point there.
Right.
Because if the market left from here to here, has the market been back here? You get what I'm saying? So you got to think about a pivot point and think about as the market is at that point. When you're talking about trade gold, and you were saying that gold was easy to buy last week because it was just going up. Only thing you had to do was wait for the pullback and buy at the pullback. And what do you think usually pullbacks happen to go? They have to go to untested areas. have to or retest those areas. It wouldn't be a break and retest, but it would be a retest of some area where you would find buyers to be getting ready to get in that, or where buyers did get in that, and the market makers were trying to knock those guys out. So that's what that would be. But yeah, again, most of these markets are all uptrend, as you can see. Most of them are uptrend. But if we're talking about day trading aspect things, you think about moving on a day-to-day basis. How would you find those targets on a day-to-day basis, especially if you're on a 5-minute chart or something like that? You're trying to get those moves into the direction that you assume they will be in the next analysis. For me, again, and this is another thing about G2 is, so this chart here on the side is giving me my confluence factor. So usually when I trade, I would come to a chart and I'm looking for every single type of confluence factor I can find to get an edge. So now I can use Jeanius to find that for me. And so obviously who's heavily weighted on the chart? The buy side heavily weighted is we're testing the demand, which is clearly we can see we're testing the demand. Supply break and retest. So it once was a supply is now being tested. An uptrend. So clearly we can see it's in an uptrend and here an uptrend. The multi-time frame trend direction, I'm looking at multi-time frame at this time frame, the weekly would be up. And to be honest, the weekly is possibly on its way down if this doji end up breaking down. And then it also has a reversal pattern here as a hammer. Same thing here, trend up, and so it's giving you certain factors. Like when I come into the market on these daily and weekly, if I see prices sitting at a demand and a supply at the same time, I know for a fact I'm in a range, because that means that there's no room for buyers and sellers to make a move to the side to show me that somebody has taken that side. So for me, I'm seeing that even in this range, it broke below this range. But the first thing it did after it broke below this range last week on Dow is it tested this trend right here. It tested this trend line and then it swept liquidity here and it opened and it closed back into the range the very next day. That let me know that even though I wanted to sell beyond this point, I'm just looking at what I see. The trend is still holding. Backside range, and more than likely, if price breaks a range and comes back to the range, more likely on a retest the range. At least before you retest the high of that range. Here's a short-term trend line right here. Well, this is a long-term trend line, but if I went to a small chart, you will see that this trend will be down right here. But this is the one I'm respecting. I wouldn't really respect this trend line here. I would more so respect this trend line here. The only way I would respect this trend line if this one broke. So if I saw something like this, which I do expect for it to continue to reject it, if I saw something like this where it broke here and then came up and retested here, then I kind of say my bias would be to downside. But for right now, my bias on the Dow is not to downside or upside because we're literally dead smack in the range. I would pick a decision right now at all. I'm too close to the bottom of where it's bouncing, and I'm too close to the high. So buying or selling anywhere in this area, anyway, I would recommend doing that. Now, it does continue to hold the trend. You would want to wait for price to get a really good breakout here in some of this area and allow me to tell you that that's how I am tested. And then you can kind of take a trade somewhere along this area, even in confluence with the trend line here to kind of touch some of these Fibonacci extension points. So I know you hate when I say Fibonacci. Well, I look at so far, I look at the SPY, I looked at NQ with the Qs. I could jump to silver. Look at gold first, we'll do silver. Right. Look at both of those. So looking at gold on the weekly, gold and silver both have been pushing heavily. These have been interesting, like Twan said, you have to discontinue buying because we don't know how far it's going to go. We don't know when it's going to go down. Obviously, right now, the gist of trading gold or silver is to literally wait for pullbacks. I mean, literally look at these days here. All they do is just buy. Now, my thing is, again, I draw Fibonacci extensions. Gold is now inside of a Fibonacci extension, 161 zone, 150, 161 zone. So my expectation is that gold could possibly push to 5,084 before it somewhat starts to. I would look for the trade sideways before it just drops. I'm not looking to go at all. I'm not saying I'm looking to sell. I'm saying I'm looking to continue to buy gold at least to 581. That's my and because I could drop to the 4. I didn't drop to all the time frames, but just to show you, and this is a different chart. I just have switched both sides. Like so, I have it where I need multiple Jeanius. Like I need multiple to me things on the chart. Right now, this is different. But just looking at it, we're seeing liquidity. We're at supply. Obviously, the more time frame is telling me that the daily, the weekly, and the monthly are up. And we can clearly see we're sitting above these trend lines. So obviously, I'm still not looking for these sales at all. I'll be looking at buys from here to here. Obviously, like you say, one, I can just buy because you want someone to pull back somewhere here. Someone will pull back to here. You get you to buy at least extended up to this point. Could it go beyond this point? Yes, because Fibonacci, they're. So it's only my opinion. So my opinion is this high. It could continue going, but yeah, we're going to continue buying gold from this point up until this point. But I'm looking for price to somewhat start to break this line at some point. Because if it does keep on, then damn, it goes just a run. I wonder what could be a reason like gold could lose steam. What could cause gold to lose steam?
I mean, I watch a lot of guys that sell gold for a living, and most of them feel like gold has not had a chance to be realistic because it's been suppressed so long, and silver mainly it's been more suppressing gold because they use silver for to build military stuff, and so you need silver to be cheap in order for have the ability to build and whatever else silver goes into. So that's one of the bigger reasons why they feel like gold is pushing so much ways down, because like the Corey always talks about, when dollar disappears, that's where all these arguments are backing up on is gold. And so realistically, there's probably isn't like a particular event. It might, maybe if there's like some huge, like maybe like a COVID kind of event called gold, maybe correct. But realistically, everybody pretty much sees it. I mean, I've been calls for 8,000, 9,000, within this year. You know what I'm saying? So
You at 8,000 like as gold 1 to 8,000?
yes, because it's such a there is really no safe haven outside of crypto. And it really, in order for you to get into crypto, you have to kind of already know about it. But if you're not somebody that's into it, the first thing you're going to go to is gold. There's no other safe haven.
Ask if I could piggyback off what you're saying.
Oh, of course.
Thank you. I did buy the gold in 2017 when it was like maybe 1,800 or 20. I think 18. They got as low as 1,800, I do believe. I've been buying it for years, and so it's been gradually going up as well as silver. I think I started when it was like maybe $12 back, 8-9 years ago. And so immediately I put in a buy order for gold, and I didn't have any problems. This was just 2 weeks ago. So Friday I was trying to put in an order for $45. I put in another order and locked me. They blocked anything else at least $500, and that went for gold, silver, and gold. So for me, I thought the same thing, and I thought it was a mistake that I was making. But no, they said, and I quote, the demand is so high that they are not accepting any orders below $500. As well as if I would have ordered, it would have took them 3 weeks in order for me to just get my product.
And
The pieces that I purchased 2 weeks ago, it took them about 3 days, always taking up to 4 days, and it took about a week and a half for receiving order on January 10th, and I get it till the 21st, 22nd.
and yeah,
That speaks volumes. So you were saying that you believe it go as high as that. Oh, absolutely. Probably higher than that. No, it'll come down. If there's a threshold of 500, that means that people are buying it, have money to do it.
and the rate of inflation. So that's the biggest thing is that the more we go to calculation, the more these so-called assets going to appreciate. However, once these are deflationary, they have a different value to them that's outside USD. And that's kind of what I'm saying about when you said that order you try to put in, they couldn't do it. Is because the scarcity is so big that, man, they ain't just letting anybody get it.
This is very true. It's as I watch, a few guys that sell gold for a living, and this is the best they've ever been in their careers. So
This is the
Wow.
biggest. This is the busiest that they've been.
But
yeah.
even with copper, I think I was buying an ounce of copper for 99 cents 4 or 5 years ago. Now, I guess copper just went, it was nowhere to find, it wasn't available. But all of a sudden on Friday, copper comes available, and now it's $8.99 an ounce.
Yeah, I mean, all the commodities are being used to build the data centers and everything else, so they're going to be in high demand. Anything like palladium, is another commodity that is going to be very high demand because a lot of these metals are military metals. At the end of the day, they ultimately are going to be scarce realistically. So whatever you can get your hands on is the reason why those prices are going up the way they are. Because he said everything is inflationary, which is going to cause those things to go up even.
I wouldn't say gold and silver are military. Like if you go look up the rare earth that we found in Wyoming, not Wyoming, yeah, I think it's Wyoming, Wheaton, and go look up what those metals they found in Wheaton. Then you'll see like those are military metals.
Uranium, titanium.
It's a weird name.
Yeah, no, I wasn't
Rhodium.
saying gold itself. myself. But
Yeah,
Yeah.
yeah, I get what you're saying.
Yeah.
but gold is just, it's just a store of value. And most, like I said, a lot of people are older than they is younger, and the older generation only know is gold.
Yeah, that's
Yeah, I
all it.
mean, but I'm assuming that's due to its physical nature, right? So, like, this was the last monthly candle selling, April, and it has been parabolic since then. I mean, I honestly don't know what to project on silver, to be honest with you, because I was just looking at these long-term trends and just saying that you're waiting for price to pull back to a certain point and buy. So basically, as long as price is pulling back into fair value gaps, obviously you will be looking to buy at this trend line right here. But at the end of the day, you're literally looking to buy at every opportunity you can, unless there's a complete reversal. And that reversal won't happen until it gets below, until it gets below this point right here.
And
This where I would say like a reversal would happen at. And I don't, I mean, even still, there's other trends that are holding. I just don't see it happening at this point. You're buying into count. I mean, legit.
I pull
I
back.
mean, even after that, the other day, bro, at this point, just not pull back. Go not pull back. Still something breaks. That's it. It's that simple. We just pull backs. But some man caught this in shot. Go ahead and look at you as well. And I think it's always yeah.
When it was over, they expected to outperform gold in the next 2 years as far as the growth. And currently it's on pace to do so. So
Yeah, I
I
think
mean,
so.
looking at both side by side, I mean, it could, and it looks good. It already is. So I don't know. We have to see. But as traders, our only thing is to buy where we know to buy, sell where we know to sell. And the fact that these guys are literally just up, I mean, we just buying. So for me, I trade futures. If I'm trading gold, GC or SI, I'm literally just buying. It should be easy. Same thing if you're a currency guy. If you trade in XAU USD, you're literally just looking for buys. Or if you're trading ZAG, XAG USD, you're literally just looking for buys, and you're being patient about price coming back to certain points to catch those buys. I mean, right now, I mean, it's like 2021, 2022 when the stock market started to boom after 2021 when the stock market started to boom after the COVID. Like everything just bought, and that's where gold and silver is feeling like right now. That boom. So yeah. But we're back at what is this crude oil right now, and I really don't trade crude oil. I have it on my watch list because it's crude oil. But what made me really look at it was the situation with Trump and Venezuela. And so just looking at the beginning of this year, this first month of the year, we had this candle buy up. And even on this candle, we kind of had a good bit of confluence factors over here. Liquidity, demand, supply break and retest, fair value gap. Um, the market trend, the multi-time frame trend was up for the monthly. The trend reversal was there, and it's giving a success rate of 83%. And then the candle pattern. I don't really trade candle patterns, but it's good to have these confluence factors. So you have this candle pattern that is bullish engulfing. So it's a bunch of factors here that's letting me know that oil could buy up somewhere into here. Even though we're holding these small these downtrends right here, I could still expect for it to go to where it belongs, which is supply areas. Because I mean, trend lines are cool and all that, but the market is driven by supply and demand. And so I would be looking forward to tap into these supply and to supply areas from these demand areas if if I'm looking at it, if that's me. So that's what I would be looking at. And this kind of a good representation too of what I said about uh when those supply and demand areas are close versus when they're further apart, you can kind of get a good gist of good price movement. So for me, I would be looking at crude oil, especially off of that news with Trump, to kind of get a good push to the upside. But again,
Can I
for
ask you a question
careful
real quick?
say again,
Yeah,
Can I ask you a question real quick?
go ahead.
Okay, so I guess I get the technical analysis part of it with the trading because I'm not a trader. I mean, I know how to make money off of it, but I'm not a trader. So with the technical analysis and algorithms and all of that stuff, with the whole Trump news about Venezuela and the market, I guess it's so what I'm hearing you saying is that it's skyrocketed or
No,
people are gearing up.
it didn't skyrocket. It just you saw where it got to a buy point and it reacted to it.
Okay,
So I'm
okay,
approaching this as a trader, to be honest with you.
okay,
I'm not a big fundamentals guy. I don't move off of news.
okay.
I don't care what they're talking about it in the news. I like to look at the charts themselves because I'm a legit trader. All I care about is
Okay.
the move. And I trade the move. I
So
trade the direction.
I guess I'm more fundamental because I'm more concerned about, I get it that the market responded to the news of Venezuela, but what about the implementation plan? Because what I'm hearing you say is more short term, but the actual implementation plan, and if they're going to actually invest in Venezuela oil or leave it the way that it is, because from what I'm hearing, it's tens of billions of dollars to even get the oil up to standard.
What would you
yeah.
assume the reaction would what would you assume the reaction would be from them investing in that oil?
I think the reaction is what it was. I guess kind of like the same thing with crypto. You hear news about Ripple and everybody buys XRP. You know, something kind of like that. But for me, it's like, okay, what's the long term? What's the long term sustainability of making money from this? What will
The
be the
long term.
plan
Well,
going
I'm
forward? Are
not
you going
long
to get
term.
the sales
I'm
and
not
the
long
time?
term investing in oil. No, I'm not long term
Ah,
investing in oil. So I'm not looking
got
at
it,
the long term. Yeah,
got
there's
it.
no benefit
Okay,
for me to long term invest in oil.
okay,
You,
got
you
you.
get what I'm
I
saying? So
understand.
for me, it's like I'm just looking at market moves. That's it. So my
Yeah.
focus
Okay.
is the market moves. Meaning, if I
Okay.
know on this monthly chart over the next few months that this price is going to go down, I can make a few $1,000s just off of crude oil alone, not just other tickers, but off of crude oil alone. I could make a couple $1,000s just off of this chart, knowing that the direction is down.
Totally understand what you're saying. Makes sense.
You get what I'm saying? So my
I
my
do.
thing
It
is
does. It
I just
makes sense.
want to
Makes sense.
yeah, so I just want an advantage of direction. That is all.
Right.
So when I look at the
I
charts, I'm looking at what happened on a month to month, week to week, day to day basis. Now on a long term end of things, I do look at the 3 month chart. I look at the 6 month chart. I look at the 12 month chart. I can kind of look at where I would want to get in. I mean, if I'm looking at the 12 month chart or the 3 month, the 6 month or 3 month chart, then yeah, the trend is down. Here's a change of character right here. So the trend changed downward here. So it could push back up into this area, but this is a 3 month chart, meaning in order for it to even get to this trend line right here, it would take another 3 to 6 months. So that's 3 to 6 months of me having a bias to the upside and then waiting for a reaction here for a continuation down, or it might not continue down. It could reverse. You see what I mean? But even if I really wanted to invest from a long term standpoint in crude oil, I would probably be looking something like in this buy zone here, somewhere across here at this point, because clearly this is where all of the buyers are coming in at.
Okay.
So from here to here to here to here, this is where I would be looking to be interested in going for long term. If you wanted to long term invest in crude
Right.
oil, you would be looking somewhere into here and maybe down here. But I mean, this is literally where this chart opens at. So it would be crazy within itself to think that crude oil is finna drop all the way down here. I mean, what was the last time it dropped all the way down here? 2020. So just like Twan said, it took a catastrophic event or a black swan event just to get a push below here. So it held here. It had a catastrophic event like COVID, black swan. It pushed this point here. It would never have pushed this point without this black swan. So they needed some type of catalyst to even get liquidity from here. You see what I'm getting at? So if you did want to do long term, I would probably wait between somewhere 33.69 and 44.26. So this would be an
I
area of
appreciate
interest right
that.
here, and
That
it's
makes sense.
yeah. So that's what I would be looking at. But on a smaller time frame, I'm looking for that push up into those liquidity areas on the higher time frames, and maybe a reversal from there. And that's what I would be looking for. So I'm looking towards the upside right now. And when it does give me a signal to go to the downside, and I'll trade down. No problem. So that's all the commodities. I did NASDAQ, I did Dow. I think I did the Russell, or did I do Russell? I did
No, you ain't
Russell.
doing it.
The Russell 2000, the Russell 2000 chart, because I can kind of tell this channel here and kind of I guess get some access to how far to go. To these Fibonacci retracements and kind of give me that prediction, like if you get to a certain point, where they go, to certain areas. So from the week, looking at how test that return here, broke below, it broke back up, so highs, broke up otherwise, and then it kind of do a smaller range right here, or a smaller channel. This would be that first long term. So like big red lines, low red lines. So I'm looking at short term and long term Fibonacci retracements, and so I don't high time frames and small time frames. I can explain right now, but these aren't just random line I'm putting on here. Looking at last week Russell and looking at this trend here and the channel that I took it got to the high at this point, which is the high time frame at 127. Fibonacci retracement finish, and it literally twice this point here. So last week I set it and remember here was let's say we pushed up and right off it. Jeanius is telling me that it's getting a what was that, an even star? Now, again, I don't trade patterns, but it's always good to have air components patterns. So this is a diverse pattern. So and they tell me that the trend is down and as a result on that day chart. So if I look at trading, everybody, we're talking about day trading. You might have swing trade, but if we walk the code, this would have been a swing rate here to continue on up here. We're not swing. But I'm of okay, if it's all here, if I wanted to short to the downside on smaller time frame of 5 minutes, I could catch sell into this area of liquidity or this area of liquidity and wait for demand to kind of kick in where buyers will start to kick in. So really favoring this right under. So as long as this line holds, we're just in channel. So for the Russell, we're just looking at sell and liquidity points. And hopefully for a high as trend line. And it doesn't buy anything, so we're wait for confirmation for a break of the trend line and just trading every formation of trend. And that's just you being patient about waiting for that to kick in. And again, I said I wouldn't go to the 4-hour chart, but even if we're looking at the 4-hour chart, we're seeing a lot of this fair value here because again, Jeanius is also fair value for me as well as demand areas. So looking at these demand areas, fair value areas right here on the 4-hour chart, on daily, it still is holding trend. It still is holding trend. And if it did break trend, it would have to break below this area here to create some form of a and then for a new trend to the downside. Does that make sense?
Yeah.
Yes.
And then you were mentioning having patience and stuff. Do you set any alerts with the app later?
Yeah, like, it'll let me know. So Lark did something really good. It'll let us put posts into the group itself. So it'll let us know when main characters happen or other constructions happen. So for me, right now, if I'm looking at the long term and short term is up right now. If this low here, the trend line rate, so let's say the price does continue falling from that higher time out of that channel. If it's a bit low here, the change of character here, and I'll get an alert, let me change the character. Once that change character have, I'm not just gonna say though, because again, look back in here, below trend here, and then roll back above it. And on high time frame, this is like same here. On high time frame, change the character here, but on high time still up. So you have to have wait for a clear break and retest of this point. So I have to be very well and then come out and test. But the thing is, once I first started trading, what I realized was once I'm area aside, I don't feel like I'm patient. But the moment I see price below here, I'm just getting in for sale. I'm not waiting for a test point. I'm waiting for an area where like going to fair value gap area. And fair value gap just move so fast that it creates a gap with candles. And basically that's where entry points were not tapped into. So anybody that bid for sales or buys that area, they didn't get tapped into the trade, so they got left behind. So for me, I would be waiting for this trend line to not only break, I need to convince me. I need these guys to go away. And I need price to come back up and basically tap back into a sale somewhere into here. And we have to have tapped into a supply area. There will be supply created once that candle is moved. So here, there should be a supply start to be created up into here. So you don't see a supply signal here. At the moment, candle becomes from here, supply should and should be ready to see a supply point. Even like we see here. So here already small amount of supply right here. From this candle to this candle to this candle. There's already small amount of supply up in this area right here. But again, if the chart is already up and we see demand, liquidity sitting around and fair value sitting around this area, you don't want demand downside. But as a trader, you kind of want to some small moves on a 5-minute or 15-minute to these areas here, basically trading towards interested liquidity and win favor. So check the overall trend, which is uptrend. So right now, obviously, we're up on the long term until we're not. Hopefully that makes some sense to everybody.
And so you had a little zone on the chart.
Yeah. So So this node was on here. I created this is using the Fibonacci retracements. So you can, and Fibonacci retracements, when you do Fibonacci extensions, I get 127%, 150%, and 161%, if I'm not mistaken. Yeah, 127, 150, 160. And usually when I get to the 161 and 150, this area here is usually an area where I would assume that, because that's what Fibonacci tells us, that this is where a trend is overextended. And this area, this is where a trend would become overextended. So from the long term, the trend should become overextended here. Let me see what low light that I use. Is it this one? Low light? No, that was short term. See, man, damn, you got you like. So I said, man, no, this ain't like Fibonacci.
I just I don't use like the fix that.
Yeah, no, I don't use it at all. But the only time I use Fib, I know the market is a place where I don't know where it's going, and I can't look to the left to see anything. So I have to, okay, well, if I can put the Fib on here, how far to go? And it's not that point yet. And that's the real area that I would target to cheat. So even somebody was seeing high and this low here, and they had this option here, and then this trend said, here's something happening. They're asking themselves where the price go. So I only go past 100%, but it finally got to that 127. So we're officially at 127 for Russell. And looking at 127, so you saw me draw the Fibonacci rate, it'll give you like this doji looking shooting star type candle right off of this point. And again, Justin not like that. He hates it, and that's big, but can't put that to these points and stay there on both points. So it was good for targets. So if I just blind trick, it's kind of good for targets because you don't know where the market is going, and kind of just use that to, hopefully it holds that point. You just trick to that point. And the good part about trading is when you have advice, you can have your information. That's it. So if I know there's a buy, I think the price could go, so from here to here, and maybe even match up with this direct point here, I just wait for it to get to that point, or I just let it drop. I would let it go again. Sorry, that's terrible way to do it. But I would just trade up to that point, and if the price does not go to that point, if it starts to trade sideways, then I just change my bias. And that's just something I learned, is to learn to flow with the market. That's literally it. Like, I don't predict the market. Even though I will look for something that's cool and all that, but there is no magical nothing to predict what's going to happen. But it can do analysis. You can kind of get a good gist of what could happen next over the short term and over the long term by just looking at charts. Like charts literally will say everything. And another thing is what I learned about the chart is I find it cool that the rich guys agree. I find that cool because they look at certain points and see when they manipulate things to get in. And you see that certain points of the chart, but it's completely right. And so it was probably traded against this downside here. And the moment people got married, they all out reversal, they push it over here. So I kind of like just wait for these on the charts themselves and just trade with that like sound. So I just see the big money, I see liquidity. I see where I'm going, and that's why I like the areas of interest. So I feel big out of the and I just trade with that direction. If that makes sense. And that's why I say I draw a lot of ranges as well, because a lot of times people get into trading and they don't realize their range, and they marry side, they don't realize there's no lag. I mean, just look at how beautiful this breakout was right here, and it said right back in and just sold off, and then it got back to this area here, and it did its thing. But we did trade up down. If you like a patient trader, you can trade outside of this point, but you also would trade in the middle. More likely, you would just trade highs and lows. Just before they hit a low, and then you wait for a reversal at this point on a time frame. Just trade the opposite direction of that. Same thing from the top to the bottom until there's a clear angel structure where you can't see no longer airing the range of this other. But again, that's where patience comes in at, and a lot of people don't have patience. I mean, I didn't have patience at the point. So I'm happy on the point where I have patience. But it does get looking at these charts and wanting to make money so bad. You want to get in, what direction is going in. A lot of times we've all been traders about the direction. We've been patient and we're at because we didn't just wait long enough for our move to happen really immediately, and soon we wasn't liquidity. And a lot of times we turn to we spend money. So me, I'm trying to help other people make money. I got liquidity. But that's what we're in channel, and we're still moving up in this channel, rejecting here. So don't date it real with straight down to these liquidity, right? And yeah, that's it. We do, y'all. We're trying to move a little bit quicker. The only things I have left is the stock market sectors and Mag 7. So I'm not going to go as deep into detail because I want to be on Federal most of the time. Oh, no, an hour. All right, so the last two things I'm going to look at is the Mag 7 and the stock market sectors. Is anybody aware of what Mag 7 is?
Yeah, fine.
Huh?
Fine. The new thing.
Can you explain it to me? Because I need to you said something.
Facebook, Amazon, what was it? Google, Netflix, Facebook, Amazon, Google, Netflix. Then it became Magnificent 7.